You've probably seen the headline by now. A Bloomberg strategist is warning that it's 100k or bust for Bitcoin, and that we could see a massive collapse if key levels break. If you're new to crypto, that might sound ridiculous, but can Bitcoin possibly drop 40, 50, 60%? We're in a new era. Institutions, ETFs, it's different now, right? I'm going to say this very clearly. If Bitcoin pushes to an all-time high, let's say 130,000 US dollars, a brutal pullback is not just possible, it's completely consistent with Bitcoin's history. And if you don't understand that, you are the liquidity. So in this video, I'm going to show you what the Bloomberg warning is actually about. The real numbers from previous cycles, including 40 to 80% crashes. What a 50 to 70% drop from 130k will actually look like in pounds and dollars. And how it feels inside a real bear market. And also how to protect yourself so you don't emotionally implode and throw away your future. Stay to the end. I'm not here to scare you. I'm here to prepare you. Let's do it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So let's start exactly where this is coming from. The article covering the Bloomberg view basically said this. If Bitcoin can't hold that six-figure support for long and it decisively loses that psychological line in the sand at 100k, we could see a much deeper flush. One of the scenarios that was raised is a large retrace from those levels. The kind of move that takes out over-leveraged longs, punishes late buyers, and resets the whole market. Now, people see 50% collapse and think, that's just clickbait. ETFs are here, institutions are here, halving, adoption, narrative. That just can't happen. Well, it can. That's exactly what retail said the previous tops as well. What I want you to understand, especially if this is your first proper cycle, is that nothing in that warning is outside Bitcoin's normal behavior. Bitcoin does three things really well. It goes higher than people think on the way up, it falls faster than people think on the way down, and it punishes anybody who believes this time it can't drop just like it did before. So if you're hearing this Bloomberg call and you're new, don't just dismiss it. Instead, ask yourself this. What does history say about big drawdowns? And let's answer that properly. We're going to keep this super simple. Let's look at major Bitcoin bear markets using widely cited on-chain and research data. I'm rounding these numbers for clarity, but the point is in the magnitude of the numbers. Cycle 1 in 2011, early explosion up, then a wipeout of around 90% from the peak. Cycle 2, which is 2013, 2015, an epic run, then a crash of a roughly 84%. Cycle 3, 2017, 2018, it was down 83 to 84% into the bare low. And then cycle 4, 21 to 22, around 69 grand in the peak, and it bottomed out around 15k. That's roughly a 77% drawdown. Across these, serious analysts from firms like Glassnode and data like BlackRock and iShares findings show a pattern. Historical bear markets in Bitcoin typically bottom somewhere around 75 to 85% range from its all-time high. Let's read that again. 75% to 85% from the top has been normal in the past. So when you see people melt down on Twitter over 20% or a 30% correction, understand historically that's not even a full-blown bear. It's just foreplay. Now, does that automatically mean we must repeat the exact pattern? Absolutely not. Crypto is now more mature. It's got ETFs. It's got better liquidity. All of that can soften the extremes. And in recent notes, on-chain analysts have pointed out that some corrections this cycle have been relatively mild compared with previous ones. But here's the key message for you. If you are building your entire strategy on the belief that Bitcoin can't drop 50% anymore, you're ignoring literally all of the Bitcoin price history. Now let's plug in the numbers you asked for, because this is where it gets real for anybody buying euphoric tops. Let's say Bitcoin rips to an all-time high, 130,000 US dollars. Everybody's celebrating. Your TikTok feed and YouTube feed is full of super cycle, institutions, never going to go below six figures again. Here's what historically normal drawdowns from 130 would have looked like. You could have had a 40% pullback. It's not even a full bear, just a savage correction. And from 130 grand, that puts us on 78,000 US dollars. Your 10,000 buy at the top is now worth about $6,000. That's uncomfortable, but survivable. A 50% pullback, which is in line with Bloomberg's fear scenario. If it was at 130 and it dropped 50%, you're looking at $65,000. That same $10,000 worth of Bitcoin, if you'd have bought it at 130, is now worth 5,000. At that point, you're probably thinking you're going to go to zero. You're probably going to wobble. And then we've got a 60% pullback. If you bought at 130, a 60% pullback will bring it down to 52,000 US dollars. Now you're down to about $4,000 if you put 10 grand in at the top. Most new investors emotionally check out at this point. Then we've got a 70% pullback, right in line with classic Bitcoin bear markets. If you bought at 130, Bitcoin's now worth 39,000 US dollars. Your 10,000 bag is now worth 3,000. And at this point, you would be going on to X and you would see titles like Bitcoin is dead. The media is laughing and people swear crypto is dead forever. None of those numbers are fantasy. They are simply maths and history. So when you hear Bitcoin could collapse 50%, instead of thinking that's FUD or it's fake news, translate it as this. That's literally within the usual behavior of this asset. And if past cycles have seen 75 to 85%, then a move from 130 to 30 or 40K region is not insane. It's brutal. I agree. I would hate it myself, but it's very, very possible. But it's within historical precedent. Again, I'm not predicting those exact numbers. I'm saying if you aren't prepared for those numbers, you don't understand the market you're in. Now let's talk about the emotional side, because this is where people actually lose. Most of you watching this who are new will only have ever seen green candles, crypto Twitter hype, victory laps across YouTube, and influencers screaming, let's send it together, and a dip that magically gets bought in a week. A real bear market is completely different. Here's how it plays out roughly. You get your euphoria top. Everyone's a genius. Leverage everywhere. People say, I wish it would dip so I could buy more. Then you get the first big leg down, maybe 20 or 30%. This is called a healthy correction. Everybody buys it. Liquidation starts quietly. Everybody's still coping though. Then you get the dead cat bounce. Price bounces. People say, see, that was the bottom. It's 500K Bitcoin next. This traps fresh liquidity on the wrong side. And then you've got the nuke. You're dropping 40 to 60% from the all-time high. This is where narratives break. Institutional support doesn't magically save it. People who bought late are underwater. Margins cut, margin falls, false sellings, anger. You start seeing tweets like crypto is rigged, I'm out. And then you've got the grind. Months of boredom and pain. The worst part is not the nuke candle. It's the 6 to 12 months of sideways to down, low volume, zero attention. That's when the real capitulation happens. People sell at exactly the levels they wished for back at the top. If this is your first cycle, you need to hear this. It will feel like it can't possibly go lower. It will feel like you must sell to stop the pain. It will feel like Bitcoin is finished. We've been here before. Every single time in history, the same pattern. At the top, it will never crash like before. Near the bottom, it will never recover like before. And both statements are wrong. Your job is not to perfectly time the tops or the bottoms. Your job is to not emotionally detonate yourself in the middle. Let's turn this from doom to discipline. Here is how I want you, especially the newer Wolfpack gang, to think about it. Number one, expect volatility as part of crypto. Bitcoin is not a savings account. It's a highly volatile, speculative, emerging asset. Yes, I know that I often say that I use it like a savings account, but the reality is, a savings account is safer. This is a risky asset. Historical data and even institutional filings underline this. Huge rallies followed by steep drawdowns are normal for Bitcoin. If you accept that up front, you stop being shocked every time it does what it's always done. Number two, don't bet rent money on an 80% asset. If a 70% drawdown from your entry would destroy your life, you're too big. Simple. Size those positions so that even a savage bear market hurts your ego, not your ability to pay bills, buy food, or even sleep. Number three, separate traders from investors. Be honest. Are you trading short term or investing long term? Traders, you must respect levels, set stops, manage risk, take profit into strength. If you're long and wrong, cut it. No hopium, get out. And investors, you build a position you believe in over years, not days. You expect deep corrections. Use your plan and your DCA levels in advance instead of panic selling or FOMO buying in at the wrong times. You can be both, but not on the same bag with the same rules. Number four, have a bear market rules before you need them. Write these down. Put them on paper, not in your head. Put them on notes on your computer if you need to. Examples of that could be, if Bitcoin runs parabolic into six figures, I will take X off the table. If we drop 40 to 50%, I will not panic sell my core sack. If we reach a 60 or 70% drawdown, You'll only sell if the thesis is broken, not because I'm scared. If you don't pre-commit these things to yourself, you will be impulsive, you'll improvise, you'll change halfway through. In a 3 a.m. liquidation cascade, improvised decisions are almost always terrible. Number 5, reduce leverage before it reduces you. Leverage is amazing content. Big P&L screenshots, hero trades. It's always why people get absolutely obliterated at the exact point the market turns. If we ever approach that euphoric 130k region and every influencer is screaming, boom, we're going to the moon, you should be doing these things. Reducing your leverage, not increasing it. Protecting capital so you can survive whatever comes next. Never all in. Never one trade away from ruin. In the Wolfpack, we talk about this consistently, having guardrails, using data, using structured systems, not revenge trading your way into poverty. And number 6, use fear as a signal, not a master. When you see extreme greed, be cautious. When you see extreme fear, zoom out. Most people invert this. They ape in at the tops because it feels safe. They sell at the bottom because they feel scared. You're here so we can break that cycle. So let's come back to that Bloomberg warning. Instead of, Bloomberg says Bitcoin dies, so we should all panic. Instead, you should translate it as this. If Bitcoin does lose that 6-figure line in the sand, and we lose those key levels, a deep retrace is entirely consistent with past cycles. Don't be naive, manage your risk. That's it, that's all you've got to do. Serious players look at historical drawdowns, macro conditions, liquidity and positioning. They don't assume ETFs are here, therefore numbers only go up. And you shouldn't either. If Bitcoin rips to 130k, then we get a brutal 40 to 70% correction. I don't want my community shocked. I want you nodding and saying, we talked about this. I sized for this. I'm emotionally prepared for this. Because that is actually how you survive long enough to see the next all-time highs. So if you're new to this and this is the first time anybody ever told you something like this, yes, Bitcoin really can drop 50+% and still be alive. Then welcome to reality. This is the grown-up version of crypto. Here's what I want you to take away from this video. A 40 to 70% correction from a major high is not FUD, it's historical normal behavior. Your feelings in the bear market will lie to you. Data will not lie to you. You don't have to be scared. You just have to be prepared. If you found this useful, hit like so more people will see it instead of blind hopium. Subscribe if you want honest, data-backed content on Bitcoin, XRP, and other cryptos as well. Not just Moonboy thumbnails. And if you want to go deeper with us, with live breakdowns, tools, live streams, signals, come over to our community. You know where we are. You can come and join the Crypto Wolfpack. There's a link in the description, or you can head over to milkshakematty.com and click on the Crypto Wolfpack link. This is not financial advice. I'm sharing my opinion and experiences. Always do your own research and never risk money you can't afford to lose. My name is Milkshake Matty, and I really appreciate every single one of you that have made it this far in the video. If you can please hit that subscribe button, hit that like button, and drop me a comment down below. Come and say hi. I'll reply to every single person that comments. I'll be seeing you on the next one. And remember, the strength of the wolf is in the pack.